Hello and welcome to this week's episode for Spy Trader Now. I am your host. My name is Ken, and let's dive into this week's episode. It was an exciting week for the stock market as we've seen some volatility. Our goal here at Spy Trader Now is to beat the S&P 500 buy and hold investor, and we try to do that each calendar year. We reset our portfolio at the beginning of the year, and then we track the two portfolios throughout the year to see how the portfolios are performing. So that's what we do here, and we do that with a 3-position portfolio. We either have shares of the S&P 500, we buy the electronically traded fund symbol SPY, or we will do options, both calls and puts, and we sell them and buy them, or we're in cash. Currently, our portfolio is 100% in cash, and we need to figure out if we want to deploy that cash during the week. And as we go through the presentation, I'll show you at the end of the presentation what my next steps are for trading this market. Here at Spy Trader Now, what we do is we buy, sell, and trade the S&P 500. Our portfolio is currently up 1.73%. Here we try to put more of this green in your wallet. I'm going to go through the charts in great detail later on in the presentation. Just to give you a little bit of history of Spy Trader Now, during the past 3 years, in 2022 we were up 21% when the S&P 500 was down 19%, 40% differential, folks. That's a fantastic return on investment. And in 2021, we had a fantastic year, 78% compared to 28%. And in 2020, the S&P 500 only returned 15%, and we did 100% that year. That was an outstanding year for us. If you want to see how we do this, I want you to go ahead and hit that subscribe button, ring that bell to be notified when I post a new video, and do me a solid and smash that like button down to help me promote this video. Thank you. Here in the last week, the S&P 500 dropped 2.67%, and I'll show you the charts later on in the presentation. Okay, I made one trade during the past week, and that was on February 21st. I sold to open 2 contracts with February 24th as the expiration, 390 strike, and I got a 69-cent premium per share for that, which annualized out to 21.56% for this small 3-day trade. And here is that trade and our calculator. Actually, this here is where we monitor all of our trades. This isn't the cash equivalent put calculator, but this is all in the Excel spreadsheet. If you want this for free, just go ahead over to spytradernow.com. There'll be a link down below. You can go to documents and you can download this document for free. Also, if you would like to sign up for real-time trade alerts so that when I do post a trade, you'll be notified via email and text alert, you can sign up for that here at spytradernow.com. This is our equity curve for the year, so we see how well our portfolio is doing, and this is our portfolio. This here is the equity curve for the buy and hold investor for the S&P 500. And here we have a comparison of the two strategies on a percentage basis so you can see how well they're doing. You can see how the SPY buy and hold investor has dropped off dramatically over the last couple of weeks, especially last week, because it just nosedived directly down. And so they are still beating us, but not by much. That gap that we had a few weeks ago has dramatically closed narrower. And here is how the FOMC is doing with their rate hikes. The last rate hike was done on February 1st, 2023. 25 basis points brought the federal funds rate to 4.5 to 4.75. Forbes has it pegged to go for the terminal rate to 5 to 5.5 in 2023. You can find that information here. I'll leave a link down below. Jerome Powell, who is the Fed chair, this is the person that makes the top decisions for the Fed. And what is the Fed going to do? Well, the next Fed meeting is on March 22nd, 2023, that's when they'll make the announcement. And there was an expectation of 25 basis points. Last week's data had high inflationary numbers. Those numbers now are pushing the Fed to change that 25 basis point rate hike to 50 basis points. That's not confirmed yet. That's not baked in the cake. The 25 basis points is baked in the cake because the country is experiencing higher than expected inflation. It's possible that Jerome Powell is going to go to a 50 basis point rate hike, or he's going to do 25 here, 25 here, 25 here. That's probably a more likely scenario. In other words, he's just going to leave the 25 in place for March 22nd announcement, and then he's going to push out another and add another rate hike here at the end. So that will determine how the stock market does, because it wants the Fed to start to back off of interest rates, because that's not friendly for the stock market. And from a bond market outlook, we have a very bearish stance. We have an inverted yield curve, which means that the longer term Treasury rate notes are at a lower interest rate than the shorter term 3-month and 2-year yields. This is inverted. This is backwards. This is supposed to, the 10-year yield, the longer term is supposed to produce a higher yield than the shorter term. That's telling you that the bond market has not that good of a future for what's happening with equities, and this is a precursor to what the bond market shows is going to be in a recession, and for our economic recession. And that economic recession is probably going to happen in calendar year 2023. Another thing that's not good for the bond market is we have, from the bond market's outlook, is that we have rising interest rates. 1 year ago, the 10-year was at 1.94. Today, the 10-year is double that, approximately at 3.95. So we have rising interest rates, and we have an inverted yield curve. This is all telling us that we probably should not even have any money in the stock market right now because of the bond market outlook. So that's this viewpoint. Now we're looking at it from a seasonality viewpoint. This here is going back 20 years for the S&P 500, and this is the months. And this is the months in which SPY closed higher than when it opened. Well, in the month of February, our current month, there's a 65% probability that we are going to close higher at the end of the month than when we started the month. Well, currently, where are we at? This is a monthly chart for the S&P 500. We're in the month of February, and we are currently down 2.48%. And there's a 65% probability that we're going to close higher than that on a seasonality basis. So from a seasonality basis, and considering the date of where we're at right now, the 25th, there's only like another week left of this month, then there's a high probability that we're going to start to climb back up here from a seasonality standpoint. So it's a fairly bullish stance that we should be going long equities right now. In addition to that, on the monthly chart, you can see this blue line here. I originally drew that in across the top. So these are the candle wicks, and then over here, and then we finally broke out above this what was a resistance line is now going to act as a support line. Well, guess what? We came up to here. We even shot up to here, but we came back down, and we are right now resting against that same resistance line. And it is possible that we are going to now bounce and come back up off of this resistance line. Excellent entry point into the stock market. But there is also the risk that this support line now will not hold, and we will go through that support line. And we're going to get into deeper on this, but if this doesn't hold, then we do not want to be long equities. We want to be out equities. Here we are with the S&P 500 on a 20-year time frame monthly chart. And we were in this downward trading channel. We broke out of it, which was bullish, and now you can see here in the thumbnail, so we broke out above it, but now we've come back down and we're doing that same retest that we just talked about. The MACD has dramatically softened, but it's certainly not below the 0 line. So like it was back here in 2009. So this could turn and fall if this continues to fall. So we are watching this. This next week's action is going to be do or die, basically what I'm getting at, okay? Okay, this is very important. This next week coming up in the stock market is at a very important juncture of whether we're going to hold or we're not going to hold. Now this is on an intermediate term time frame. This is a weekly chart going back 5 years. We were in this downward megaphone pattern. We broke out above it, and now we're coming back down and retesting it. Now you're just seeing it on a weekly graph. The MACD is still above its signal line on the weekly graph, but it has topped and is coming down towards its signal line. The slow stochastics has already broken below its signal line and below 80. So like I said earlier, we need to hold. Now we're on a short-term time frame. This is a daily chart, S&P 500 going back 1 year. And here you can see more pronounced that downward pattern. Oh, and by the way, I should mention, when the market comes up and then reaches a ceiling and then pulls back like this, that's can be referred to as a bull flag. For a bull flag to execute properly, this needs to break out above this downward sloping resistance line. Once we break out above this downward resistance line and we break out of this bull flag, there's a very high probability that we're going to surpass this high right here, which is about 416, 417 or so. So we are watching this. Now so we have this downward sloping flag pattern forming. In addition to that, we have this support line now, and we are butting right up against that support line. In addition to that, we have this red line here, which is an extremely well-established 390 level, which is another support line. It was acting as a resistance line. Now we are above it. It's acting as a support line. So we know we're going to have some stickiness at this 390 level right here. Very important line. We want to hold the 390. The MACD has already topped and come down, and has come down significantly to the point where it could bottom out now. The slow stochastics has already bottomed and turned up and is above its signal line, as you can see here in the numbers. It's a higher number than the signal line. Now I'm doing a little bit of a deeper dive here with the daily chart. Instead of going back 1 year, we're going back 6 months. So you can really visualize what is happening inside of this downward flag pattern. And we're trying to determine what is going to happen here. So we're either going to hold or we're not going to hold. And we are simply watching that now. Bullish stance as long as we stay above 390. Here we are looking at the VIX, or the fear index, and we're trying to watch this to see what exactly the VIX is doing. The VIX is currently in this upward trading channel right now, and we are at the bottom end of this upward trading channel. So if we break through this and start to come down, that's a good indication. And by the way, you should remember that the VIX works inversely to the stock market. So when the VIX is going up, the stock market is going down. And when the VIX is going down, the stock market is going up. So if this breaks next week through this pattern and begins to come down, that's going to be better for equities, stocks to go long. So we're just watching this pattern here to see how it develops. But if we stay below basically 23, we're currently at 21.67. If we can stay below 23 and not create this type of a pattern, we're going to be okay. But because we're at a critical juncture here on the MACD as well, we need to watch this to see what's happening. Now we're looking at this with the S&P 500 1-year chart on the Thinkorswim platform, which is my broker. And we have standard deviation lines in gold. This is the -2 and the +2. 95% of all trading takes place between -2 and +2. Pink is -1 and +1. We were at about the halfway between the +1 and the +2 when we hit that ceiling and turned back down. Similar to here, getting close to the 1 here and backing down. Now we know that we've backed down. The question is how far are we going to pull this back to? Are we going to pull it back to right here? Right now, this green line is the 50-day moving average. This solid black line is the 200-day moving average. We have just bounced off of the 200-day moving average, and we need to know if we are going to hold this 200-day moving average. A lot of people say that when you're trading above the 200-day bullish, when you're trading below the 200-day bearish. So very critical juncture that we're at now. Now here's the same chart, but instead of going back 1 year, we're only going back 3 months, so that way you can see a little bit greater detail. And when I use the shorter time frame, you'll notice how the standard deviations lines, instead of traveling down, are now traveling up, bullish. And you can see that we came to the same thing about that 50% point between the +1 and +2 standard deviations before we hit the ceiling, came down. Well, guess what? Right now we're at the -1 standard deviation. And it is possible that we could drop more than and get closer to that -2 standard deviation. But we've got so much going on here to support ourselves. We have the 200-day, we have the 390 level, and we're already on the 3-month chart at, below the -1 standard deviation. So all of these things can act as support and to begin to turn this market around. So, and there's only so much room that it can fall before it hits -2 standard deviation, and 95% of all trading is going to take place between the +2 and the -2. Well, that gives you limited downside and it gives you more upside. So now, with all that information that I gave you during this presentation, what are we going to do with it? As of February 25th, 2023, market summation according to SpyTrader Now, which is me, the market is expected to move sideways over the next week. In order to participate in market action and have some downside protection, we will sell a cash secured put on Monday when the market opens, with a caveat. That is if no black swan events happen between now and when the market opens on Monday. If I see a black swan event and the market is acting different than it is acting right now that I'm observing, then I'm not going to wait. I'm not going to place this trade. I'm going to wait and digest what it is that is happening to make the market move the way that it's moving. If we drop below the 390 level, as an example, I will not place this trade. I will hold off to see if it's a momentary drop or if this is something that's going to continue, because I need to get the market direction. And right now we are at a juncture in which we're either going to hold or break support, and it is unclear exactly what is going to happen, so I don't want to take a very aggressive stance at this juncture. The exact trade that I want to make is the cash secured put with the expiration date of 3/3/23, 390 strike, and putting that into my cash secured put calculator, which you can download for free at spytradernow.com. Tells me that I have an annualized return of 34%. The profit that I'm actually going to make on the trade is only 0.38, and it's going to be a $292 profit. Not much money, but it's not bad either. It gives me some extra cash, increasing my portfolio. It allows me to have some participation into the market for next week while the market is deciding what direction it's going to go in. And even if I do get executed into this trade, I will be picking up shares at $390 per share, which I'm comfortable doing so. I'll pick up 200 shares at my 390 strike I am comfortable with purchasing the S&P 500 right now, even with all the information in front of me, at that price. And then we'll go from there. We'll see how everything does. This is what the trade looks like on my broker's platform. So I would be selling 2 contracts because it's 100 shares per contract. That's 200 shares in total. Your expiration date is March 3rd, 2023. 390 put because it's a cash secured put. And this is how much premium they're going to provide. Well, this is when I'm putting in the numbers into the system. This is what the system is generating on a Saturday. Who knows what these numbers will look like on Monday, but hopefully there will be something close to these numbers. And then we'll go from there. And I hope that you've gotten some good information out of this video. If you have not done so already, please smash that like button down to help me promote this video. Click on that subscribe button and ring that bell so that you can be notified when I post a new video. I wish you good trading.